Greetings, my dear friends. This is Himanshu Shukla from Jump Academy, and in today's video, we'll discuss about finance domain and try to simplify its basic understanding in three categories. It will help simulate how the next generation technologies like analytics, AI, ML, and data science they are used in very large scale business domains. Yes, I also agree that having great technical skill is a must for any kind of job role. Although great business acumen adds extraordinary value in any profile. And this is the exact interviewing formula for recruiting the right talent in any progressive organization. Let's begin now. Consider a business domain which involves the operation which is directly related to every next version of the society. Can we even think of ignoring any small details in such domains? No, right? We need to be up to date in every aspect. It should run on the latest technologies. The functional approach for such system must be user-friendly and adaptive in every possible sense. It must also be equipped with well-planned and structured operational capabilities. With such great expectations, it is likely to have a lot of complexities added by default. A financial domain has the same kind of expectations. It is said to have, like finance domain is said to have the complex operation in every processes it has. To ease down this complexity, the operations of financial domain are categorized in three simplified parts. So the first category is personalized banking. The second category is corporate banking, and then it comes to be the public finance or governance related operations, right? So the governance related operations are also very important in the field of finance domain, right? To keep this video shorter, we'll talk about the corporate and public finances in the later video. So we'll not include the corporate and public finances for now. Let's talk about the personalized banking very first, right? Personalized banking, which we'll talk about, and let's see. So focus of the personalized banking is basically the management of any individual's income, okay, the expenses, investment, and the obligation, okay, and this is also called as personal finances, okay, and there can be several operations which are catered in the personalized banking. So let's talk about personalized banking in detail now, and let me go there. Yeah, so let's talk about the personalized banking first. And a very commonly known example of the personalized banking is any kind of normal bank, right? A normal bank. In general, we also call it as a like savings account, a savings account, okay? And with saving account, the depositor earns the interest on deposited amount, right? So now there is someone who is going to deposit the money in your account, right? And he's going to deposit some money in the account, and he basically, in terms of doing this, bank give them interest, right? And these accounts are basically managed by any kind of banks or financial institution. So there are a lot of financial institutions already there in society right now, and the saving accounts typically pay a very modest kind of interest. So once the individual is depositing the money on the bank, the interest is there, but it is not very high, okay? So it is a kind of modest rate. Although the safety and reliability, like this bank is set to have safe in terms of the money you have deposited. It is reliable, right? And so that is why it is considered as a great option for planning your short-term needs. Like by chance you are going to plan for some the school expenses of your kid, right? So you can use the saving account there to put on the money there in the account, and that the short-term goal can be covered with this, okay? And the bank simply holds the money from the depositor in the account, and then they pay the modest rate on the available balance. So by any chance I have put some X amount in the bank, right? So bank will give the defined rates. Usually right now during this particular period of time, it is about 3 to 6% of interest rate, which is there offered by the banks in current scenario. Okay, and a saving account, this interest usually as compared to other options of the financial banking, right? So this interest is comparatively low. Okay, and the account holder, they have the very easy access to the money which is deposited to the bank, right? So if I have deposited the money today and I want it back for some reason, right? So there are a lot of options called like ATM is also there. You can simply go and visit to the branch. Okay, you can also go and do some online transactions. This is the online transaction is right now like very commonly used throughout. So the online operations are also available nowadays, and usually we consider like saving account as a very great option for short-term goals, as I discussed right now. Okay, and based upon the financial provider of the bank, the limits of daily, monthly, or maybe yearly withdrawal and the deposit, it may vary, right? So some bank may offer you the higher limits of withdrawal, but many others, since they have their personal financial plannings, they do not give the leverage to withdraw a lot amount of money at some particular point of time, right? So it based upon the banks, it may vary. Okay, several add-on services are provided in order to ease down the smooth processing and the added advantage for any kind of common people, right? So a bearer can deposit or withdraw direct cash into the bank. Okay, you have to simply visit to the bank and deposit the cash. The other way of transferring the funds are like electronic transfer, and they can go to ATM also. The internal transactions also they can do inside the bank. So this basically covers the whole of bank accounts, and these banks account are basically like they are set to have saving account. Okay, so now let's go and talk about the next section, which is called the credit cards. Okay, and the credit cards are basically plastic money. There in Indian context, we use it a lot, right? And this is a kind of plastic money, plastic card, which is offered to some individual and based upon their financial credibility. So the user who is there, he will have his financial credibility, right? And based upon that financial credibility, the specified limits are provided to that user. So some maybe X rupees of credit is provided to that user to purchase some kind of goods and services. So with using like this money, this plastic money, basically you can, like a user can purchase goods and services. Okay, it can be done online. You can go and visit some store, do using the POS also. POS, okay, point of sale, right? POS also, you can do the transactions and get the goods and services. Important point is you are simply holding that plastic card, not the actual money with you. Okay, and with this, actually user gets the easier option for making the high-end purchases. Okay, so maybe right now user do not have the money which is required for some transaction, so the X amount is required, but user is not having that amount. Okay, but the card is having that limit. So even after not having that amount in the pocket, physical cash is not there in the pocket in the bank, right? The user is having the flexibility of utilizing that amount, like spending higher credit limits. Okay, and in turn, actually user is liable to pay this amount, whatever amount he has spent before the stipulated time. So bank have mentioned that usually this period is something around 45 days, and there are specific calculation by different organizations, different banks, right? So within the 45 days of your transaction, actually you'll have to give the money back to the bank. And if you are failing to pay it back, the whatever utilized funds you have failed to pay back, the bank charges some kind of interest for this particular amount. So user is liable to pay the additional charges. as defined by the issuing authority, right? And as recovery of these funds, it may include a lot of complexity. Bank may have to go through multiple processes and multiple other things. Like, so credit cards, they are considered as an unsecured account for the bank. Okay, so this is very important point to understand, because being an unsecured, like, they are not very much sure, the bank is not very much sure if they are going to get the money back or not. So for this specific reason, right, they charge the higher interest. The interest is higher on the amount you spend. Actually, not spend, the amount you have not paid back in the stipulated time, right? And the outstanding due, whatever outstanding due you'll have to pay the interest, the charges on that amount. Okay. Also, it is being like very handy medium, right? The details can be easily reached out to other persons also. So fraudsters, they basically easily target the credit cards for any kind of fraudulent transaction, and it may cause the financial losses also. So there are a lot many fraudsters available there in the market, and you need to be very much careful with them, and do not share your credit card details or other personal details with anyone, right? You have to be very cautious in that. And users are found to have the tendency of overspending due to the flexibility of ease of use. So flexibility is something like, as I took the example earlier, right? I never had the X rupees in my hand, okay? But since I have the credit limit with me, and I want to spend on some kind of good, some kind of services, maybe I want to go to some holiday, I want to purchase a car or something like that, right? So since I do not have the money, but I have the flexibility of using this particular amount, and I think that after 45 days I'll be having that money, right? So people used to have the tendency of spending higher amount, right? And credit cards, they are also considered in this way, that as we do not have the fund, but we require it. So that is where it can also be considered as a option of emergency fund, right? There may be some kind of medical emergency, right? There may be some kind of like you have to deposit your fees, you have to do some other tasks, book your air ticket. Right now you don't have the fund, but you have to visit somewhere, right? You have to book your air ticket. These kind of services which are coming to you as an emergency, right? So it is also one of the option for arranging the emergency fund. And to encourage the higher uses of bank, like uses of the credit cards, banks basically tend to offer a lot of add-on services and benefits. So this is also a very important point to understand, that although banks tend to say that you get this particular feature, right? But you need to be very wise enough to understand that if that feature is required to you or not. Okay, and to increase your purchasing power, bank basically tend to give the add-on services, right? And the commonly known credit card network providers, they are basically Amex. Okay, and this is also there is one called Discover. Okay, and there is one called Visa, which is commonly known to us. There is one called MasterCard. So basically, if we understand these four providers, they are not exactly. I think this is getting a little bit messy. Let me remove it. Right? Okay. Okay. So what's happening there? That maybe if you talk about these networks, right? We discuss about the networks, right? So all the networks, they are not exactly the bank, okay, but they are the providers, right? The providers of the services which is related to credit card. And what a bank do? There is a bank, okay, and bank do a tie-up with them, right? They do a tie-up with them, that you provide the services to us, and we give the some kind of facilitation charge to you, okay? and for the smoother services, bank basically do this kind of tie-up. And since the flexibility of immediate credit limit, whatever you want to have, you can have right then. An option to pay later. This is also one of the very important points. The credit cards, they have become a lot of like it has become a favorite option among the Indian commodities, right? So credit cards is also one of the very great example for the personalized banking. Okay, and let's go and talk about now what we have covered until now is. One is the bank account, and then we have discussed about the credit cards. Let's talk about the mortgages. Okay, so so mortgage is also another kind of personalized banking, which basically offers some kind of loan. Okay, loan to a customer. Okay, in exchange of the security of the property, right? So until the time whatever the cases we have discussed, right, there is no mortgages mentioned there, right? But here we are putting some mortgage. Mortgage is basically a kind of security, and in this case basically for mortgages there is real estate is involved in that, right? Real estate is some property, some physical property is involved in that, and this is basically given to the bank, for the purpose of loan. The borrower basically he seeks the funds from the bank, and the borrower is the customer here. Okay, and bank basically in that case actually it becomes the lender or maybe the creditor, right? And if we talk about the overall process, the real estate, the owner of the real estate is customer, right? The owner of the real estate is customer, and the owner of the loan, the owner of the loan is the bank. Okay, and borrower is in that case it is keeping the property which is kept as a guarantee. Okay, and this is kept, the real estate is kept as a guarantee with the bank until the time they have paid off the loan totally, right? And the creditor and the customer are they sign up some kind of bond together. Okay, they have some legal obligations, and they sign some bond and legal agreement, right? And in order to pay the loan amount, the creditor charges the bank, or the creditor it charges the additional interest, right? So it is not the case that you have borrowed some 1,000 rupees and you paid back just 1,000 rupees. Okay, you'll have to pay higher amount, and the higher interest is charged, and upon the repayment of the loan as per the legal agreement, right, the borrower is again entitled back to the ownership of the real estate, right? Till the time you have not paid the interest in the full amount, the ownership of this real estate is there with the bank, right? And once you have paid it, it is again back to the owner, right? And the repayment of these kind of mortgages, basically the period of that is something around 15 to 30 years of time, and the payment frequency usually you have to pay it monthly, which is very commonly used in Indian scenarios. Okay, monthly you have to pay for 15 to 13 years based upon the loan amount and the tenure or whatever mortgages you have put based upon all those conditions, and you have to pay them back as per the agreement, right? So we have until now we have discussed about bank account, credit cards, and mortgages. Okay, let's go and talk about the next point, which is called line of credit, right? So the line of credit is basically another form of personalized banking, and it is usually offered by lenders or maybe banks, or we also call it credit union in some countries, right? So based upon certain qualifications, whatever qualification you have, a user can utilize the pre-approved amount, right? And for a defined period of time. So here what again happens, see, the bank is always there. Okay, the bank is always there, and a user is always there, right? A user is always there. I'll make a smiley there, right? Because this user gets some money whenever it requires, right? So a user is always there, right? And bank is what bank is doing, it is giving some kind of credit limit, which is basically tend to have like a virtual limit, right? And which is given to some user for some point of time. Okay. And there will be no charge for offering this credit limit. Okay, there will be no charge, no interest, anything, and until the time you are not utilizing it. Okay, it is just a kind of security that you have this kind of money available. So whenever there is some kind of emergency, or there is something important has come up, right? So you want to utilize it. The day you start utilizing it, the bank will start charging some kind of nominal amount. And here the approved credit limit is reduced by the utilized amount until the repayment, whenever you have repaid. So let me take an example. So that by chance you have taken some 1000, the credit limit for you is given for 1000 rupees. Okay, and at some point of time, maybe on day 15, okay, you think that you require 500 rupees in that. Okay, so on that time 500 rupees you will take, and bank will start charging some x percent on this 500 rupees. Okay, now your credit limit is being reduced by this amount. So right now your credit limit is 500 rupees only, right? So you have to remember it. So whenever you utilize some amount, the credit limit is also reduced. The utilized amount, you will pay some interest. The credit limit of loan is again reset whenever you pay this money fully back, right? Whenever you pay this amount fully back, and the approved amount will be again reset, and it will be 1000 rupees. And it is again a different form of loan, where the approval and the limit are defined only at the time of the account opening. So I'm saying that once the bank has given the credit limit to you, only one time you will require the approval process, right? In case of other cases like mortgages, right, or other loans, right, what you have to do is every time you want to take a loan, you have to go back to the bank, and you have to get the approval process done once again, right? But in this credit limit case, you do not have to go back for the approval again and again. You simply have to utilize, you pay the interest, and you pay the money back, and utilize again until the time you have the credit limit available with you. Okay, and it is the user is basically free to avail the agreed amount without any kind of pre-approval with that, right? The line of credit is basically like appropriate solution for those users who are having the frequent need of additional fund, right? So let me give an example that for some reason I have to pay my rent on 5th, right? And for some reason my organization who's giving me my salary, right, it is giving me on 10th, right? So there is a gap of 5 days, 5 days there, right? But you have the liability of paying the rent there, right? On 5th you have to pay it to the owner, right? So at that time you can utilize this particular limit, and you know that you can return it back in 5 days. Okay, so this here it is considered as a case where the additional fund you need with your portfolio on a very frequent basis. Okay, since it is a frequent basis, you do not need to go back to bank again and again and get the approval done once again, right? And that is where actually credit limit is very helpful to those kind of users. Okay, so yeah, let me go ahead now and talk about the next topic here, which is called as employment income, right? Yeah, so income from the employment is basically managed to cater the expenses and earning of any kind of salaried employees, right? So you need to take care that anything which is related to expenses in the earning and specific to the salaried employees, okay, that is considered into this category. Okay, and now let's talk about the personal spending and expenses. Yeah, here the important point is that the expenses on a kind of self fitness and wellness are the expense amount which are included into this section, the personal spending expenses. Okay, educational fees, uh, hobby, right? Whatever hobby you have, safety equipments, okay, and many other factors which help in uplifting your health and the well-being options. Okay, they are considered in this particular category. Okay, this form of the banking is not so very popular in Indian territories, right? We are not very much inclined towards spending into the personal spending and expenses and taking the loan for the same, right? So not very popular in Indian territories. Okay. Now let's talk next about the taxes, saving and investment together. Okay, and yeah, we'll talk these three categories together: taxes, saving and setup. Okay. So these are the few categories which are considered into the personalized banking. Okay, and each category they target to the planning and management of individuals' fund in different segments. Okay, whatever segment I mentioned, either taxes, investment, and all segments actually we cater for the individual planning. And in general, we consider that there are stocks. Okay, there are bonds. Okay, and there are real estates. There are real estates or other categories also. They are investment related personalization banking. Okay, so whenever you invest, like these things are considered there, right? And while purchasing any kind of stock, right? Let's talk about a stock here. A user is entitled to the ownership of issuing organizations, assets, and profit, right? So you purchase a stock and you are kind of having the stake in the ownership for the issuing organizations assets and profits. Okay, and the individual can have the higher ownership if he have purchased a higher number of stocks, right? And for these actually the categories are like information technology, you can consider healthcare, the finance industry, or the communication services, the consumer staples, energy, utilities, real estate, and the materials. Like these are the different sectors which offer the stocks for the public use, right? And based upon the individual's capacity, the different type of stocks can be chosen. You choose based upon your own capacity, right? And the type, it basically ranges from the, like, you can have the growth stocks, you can have the IPO, you can have the dividends, right? IPO are basically those who are for new kind of projects, right? And newly issued stocks in any organization to sponsor the new projects, right? So that those are basically stocks. And if we talk about the bonds, they are issued by the government or the companies, okay, to raise the funds borrowing from the investor. Okay, as an organization, I'm going to borrow the money from the investor. As an organization, I also issue the bonds for raising funds for specified projects. So a new project I have, right? I'll ask this money from the investors, and the issuing of the organization promises to pay it back to the investment, the investment amount over the certain period of time, right? And organization pays some very good amount of interest on the investment amount, right? So bonds are very important point in terms of investment criteria. And real estate is also a great investment option, which is considered under the personalized banking, right? And with great diversification, potentially high returns and the lower risk, the real estate offer high dividend among other kind of investment options, right? So a user can choose from a real estate, or maybe a healthcare, offices, and mortgage for like these categories are there for you can choose for the real estate investment. Okay, and usually a real estate earning attracts taxes as ordinary income. Okay, you don't consider it different. As an ordinary income you have to pay tax. So, and apart from that, you have to take the wise decision in choosing the right portfolio, as there might be some kind of risk associated with some projects, right? Some real estate projects may be having some kind of financial crisis, and some other reasons are there, and that's why the projects are on the risk. So while investing on these kind of real estate projects, you have to think very wisely. You have to understand the portfolio of those companies, right? And then invest. Think wisely there. And right now we have discussed about the services is offered in the personalization banking. Okay, personalized banking, and I'm suggesting you to watch this space for more categories and have the proper understanding about what makes the financial domain such a big industry, right? It is already a big industry. A lot many things are happening there. A special tip for today: become a doer, right? You have to become a doer. Just don't learn. A lot of learning material is already there available in the market. Go around and you'll find a lot many things and implement what you have learned today, right? Don't just learn. Okay, why don't you go and open some kind of online bond, right? Or FD, the fixed deposit today, right? We have discussed many things here, right? And try understanding what significant detail it can cater. Post in the comment section what exactly you did and what was the new that was learned by this, right? And ultimately, if you found this video useful, you should definitely check our next video, okay, where we'll be discussing about the commercial banking, right, which is very important part of the financing. And the focus of the Jump Academy is to connect potential talent for real life revolution of evolving and next generation technologies, right? Happy learning and stay focused.